Welcome to the Prime Property Finance Podcast with Gareth Morgan and Mark Watts. This unique podcast will dive deep into all areas of property investing finance, going behind the scenes with property professionals, investors and clients. Between us, we have 35 plus years experience in property finance. The podcast has been launched to share knowledge, mindset requirements and experiences of successful investors and professionals. We aim to simplify many of the complicated areas of finance and investing and provide valuable and easy to implement tips. Keep an eye out for our new longer episodes every Tuesday and our shorter ones every Friday. One of the most expensive mistakes I see people make in property, in business, and in life generally is assuming that the cheapest option is the best option and automatically the best value. We're all guilty of it from time to time. We compare two numbers, two quotes, two fees, two percentages, and naturally our eyes gravitate towards the lowest one. But what I've been reminded of recently is the headline number is rarely the full story. In this episode, I want to talk about why the cheapest option isn't always the cheapest decision and why spending a little more time getting under the bonnet can save you a lot of money, stress, and disappointment later on. Most comparisons are made at surface level. We compare rates, we compared fees, percentages, quotes, purchase price, but we rarely stop and ask, what am I actually getting? What's included? And am I comparing like for like? The easiest thing to compare is usually the least important thing to compare. So let me give you a few examples of how this works and the things that I've seen and things for you to consider. Recent example for us, we've been recruiting at Prime Property Finance, and we're currently growing the business and trying to bring some more self-employed advisors into the business. And as a directly authorised firm, we retain 100% of the broker fees and commissions that we receive from lenders and insurers. And then we distribute that to our self-employed advisors. And occasionally somebody will compare that against another proposition where they may have been offered a higher percentage split. And on the surface of it, the higher percentage split looks like the best deal. But a number of conversations that I have, the companies that they're comparing that to, for instance, may be part of a network, and the network are deducting a fee at source. Then the company that they're working for then takes a fee, and the fee is becoming diluted. So what actually they're getting, maybe getting what seems like a higher percentage, but it's actually of a lower number. And there might be other fees included, like network fees, compliance fees, admin fees, monthly charges, systems, tech fees, etc. But also for that, what are you getting for that percentage? What support are you getting? Are you getting any leads, etc.? So, what materials, support are you getting with marketing, compliance, training, sales, etc.? So there's so many different fees that you can look at, but also what are you getting for that percentage? So that just made me think about this a little bit more. And in this example, it's not the percentage split, which is the outcome. It's what you actually keep is the outcome. And that's the one that's important. And then outside of that, so outside of the numbers, what's the intrinsic value that you're getting for that, which in this example would be support outside of the actual cash that you get. And we see this with property investors all the time. If you get a quote for finance, whether that be a mortgage or a bridging loan, what are the arrangement fees? What are the valuation fees? What are the legal costs? Are there any exit fees? And then the two most important ones for us are, what are the speed? How quickly is this deal going to be done? What's the service levels of the lender, the solicitor, the valuer, which are all third parties that we can't control, but we may have an idea of what those are. And the most important one for us is certainty. Is this deal going to happen on the basis that in the way it's presented? And more often than not, the deals with the best rates on the market are the ones that are most likely to not go through if there's anything quirky that comes up anywhere down the line, because the lenders with the best rates are the ones that haven't got any wriggle room within the criteria because they are winning business based on the rate. So generally, that's what we would class as more vanilla cases. So two finance options can seem similar, yet one can be significantly cheaper than the other, or can be significantly more expensive. But you've got to consider all of the actual cost, but also you need to consider the the ability to get the deal across the line. Because if you can't get the deal across the line, there's no sense in getting the cheapest rate if it doesn't happen. And that could be more expensive than anything else. We look at it when another example of this is in refurbishments. So, you might get two building quotes. One contractor comes in at, say, 25,000 and another comes in at 32,000. And you just immediately look at the £7,000 difference. But are they actually quoting for the same thing? Is it exactly the same specification? Are they using the same quality materials? Is it going to be the same finish? And then, so those are the things that can be identified. Yes or no, are they the same? Then you go into what's the time scale? Are there any guarantees provided? And is it the same experience? If you've got a one-man band who's going to take 2 months to do the work over or let's say a one-man band is going to take 3 months to do the work, yet it's an experienced builder is £7,000 more expensive, but they've got a team, they're going to come in and they're going to smash that work out in a month. That means you could miss out on 2 months of rental payments and get the deal and refinance quicker and get cheaper finance. So all of a sudden, that £7,000 all of a sudden isn't as significant. The experience, they're going to turn up when they're going to turn up because you've spoken to previous clients. They've got a really good reputation and the work's carried out quickly, the tenant's in and the refinance can happen. So all of a sudden, when you're comparing them, you just make sure you're comparing like for like. This happens all the time. Again, this outside of property, you think of any services. So maybe you're applying, you need a new website then, or you want to work with a marketing company, or it could be an accountant or whatever. But if we just use a website for an example, you want to have a website built. Does it include, how many revisions to the website does it include? Does it include ongoing support, implementation? What's the expertise of the person building or the team building it? How responsive are they? So there's so many different variables that you can compare in the cost. And I guess the cost of a bad decision is when you focus on price instead of the risk. The cost isn't then what you pay. You have to think about delays, mistakes, stress, missed opportunities, and then poor outcomes. Do you end up having the website rebuilt in a year's time because you're just not happy with it? So just really consider, not just the price. Think about, am I comparing like for like? What's included in the quote? What's excluded in the quote? What risks am I taking between the two quotes? And then what outcome are you actually trying to achieve? Price absolutely matters, but getting value for your money is also more important. So hopefully that's been helpful. Just a few things to reconsider sometimes when you are getting quotes for various things. It's always good to get more than one quote as well. Don't take the first one that you get. Do shop around, but make sure the people that are quoting you, there's an old saying that you get what you pay for. And another one, it's you buy cheap, you buy twice. So just bear that in mind and you won't go far wrong. So whether you're looking at a property deal, a mortgage, a refurb quote, a solicitor, a broker, a website provider, or even a career opportunity, spend time understanding what's actually included. Get under the bonnet, compare like for like, and remember that the cheapest option on paper isn't always the cheapest option in reality, because the real cost is not always the headline cost. Thanks for listening. I'll see you on the next episode. Thank you so much for listening to our podcast. We hope you have learned something and have some tips to take away. We'd be very grateful if you enjoyed the show. You could give us a review and share with anyone that you know that may be interested. And of course, subscribe to the show so you can get notified when a new episode is released. If you'd like us to answer any questions or go deeper on a specific topic, please drop us a message at primeproperty.finance. See you on the next episode.